In supply chain, and he led a cost reduction effort on the 787, working with engineering to create and move cost down projects quickly through the Boeing approval system to enable them to be incorporated onto the airplane. So please join me in welcoming Jeff Carpenter.
Good morning. All right. As Brett said, I am Director for Boeing Company Strategy for Materials and Standards. So I look across, in previous years that I've been here, I've really focused more on commercial, and I've got a lot of the commercial stuff in here as well, because that's the big volume in titanium. The one slight tweak now to my role versus prior years is I look after the strategy for the corporation spanning defense and space as well. So with that, I suppose this is the clicker. All right, going to do a little market outlook stuff. For those of you that don't see this very often, it's a snippet of some of the publicly available info that we put on our website on a 20-year projection for commercial airplane sales, not just us, but everybody. And I'll talk about some of the charts there. A little bit on defense, some business environments. This is thoughts from myself and our team. Talk a little bit about forging supply chain integration. Titanium green loop concept, we're calling this. Really, we're talking about shifting our thinking to regionalizing some of the titanium supply chains rather than it being so U.S.-centric in terms of the way we run it in and out of the U.S. Little tie demand, and I don't want to get everybody too excited. I'm not going to have a discrete number by ship set, but we will talk about generally our demand is continuing to increase for titanium as our airplane rates do, and we see some significant upside potential out in the future. And then a few closing thoughts. Okay, so we've got a few of these. We do a 10-year look and a 20-year look. So on the 10-year look, looking across commercial, defense, and services, almost $9 trillion of business and aerospace to be done across those different spans, and pretty evenly split. You guys know us well on the commercial side and the defense side. Over the last 2 years, we announced a different division, Boeing Global Services. And so now we're showing this on the chart as a big piece. It's a key focus for us in the supply chain and as a business. When I was here last time, we hadn't yet closed on, or maybe we had just barely closed on KLX. We've been working the last year on integrating KLX into Boeing. KLX, for those of you that don't know, was a fastener distributor, now called Boeing Distribution Services, Inc., part of BGS. On the military side, you see the split there, and a picture of the smattering of products that we do on the military side. The numbers there are total demand outlook. Between U.S. international, we've got a growing international market on the defense side, and then you see the split there between aircraft and everything else. Over the next 20 years, I'll show a little more detail on this, $16 trillion over 20 years, so 9 over the next 10, 16 over the next 20 years. From a growth standpoint, what's fueling this is we've been doing really good. Like Henry might have talked yesterday about the super cycle, and this is what it is. We've had those two trend lines on the bottom there, on the left-hand side, the dotted lines. That's part of our 20-year forecast, and you can see everything is generally above a 20-year forecast in GDP, traffic growth, and then the airlines are making very good money on the profitability side, which is allowing them to invest in new products for ourselves and our competitors, and we've been making better and better products, so that allow them to make more and more revenue. I like to tell the story of in my entire adult, I'm from Seattle, in my entire adult life, I've been able to go back and forth to Disneyland for $200. And those of us that buy airline tickets, that's how we make our choices. We cannot continue to keep the prices going up on the aircraft. The airlines are running much more higher load factors now, and they're making more profit they're being run by not pilots so much as they were in the past. Now they're running by folks who are running businesses with assets, and they want to make money with the assets. So for us, it's been a nice 9-year run ahead of hopefully another 20 years of good run. I like Henry's super cycle. Okay, back in let's see, when I started working on the Sonic Cruiser, if anybody knows what that is, at the end of 2002, when Airbus launched the A380, we canceled the 747-910K, if anybody remembers what that was, and launched the Sonic Cruiser. That's the point in time where we made a shift in strategy and announced it a little more publicly, saying that point-to-point is going to be the future for air travel. And it turns out, this many years later, we were right. Out of 1,700 total long-haul routes, 550 of them are new in the last decade. And Airbus has seen the same thing, and the A350 is serving a lot of the same markets now that 787 is with long-haul flights going point-to-point. And then you see the distribution on the regions. I'll talk a little more about the regions and the sales side here in a second. But one thing is, in the old days, and you'll see it in a few charts, in the old days, 2/3 of the market was North America and Europe for aircraft sales. And now it's nice, evenly split around the globe. Same thing with the long-haul flights. A lot more long-haul flights between the regions. That's largely due to the growth in Asia Pacific. You'll see in a few charts, I think 40% of the market right now is Asia Pacific for commercial airplanes. Okay. The last few looks were 10-year looks and 9-year looks. This is built into our 20-year forecast for airplanes, where we see the economics driving. So you see GDP, and a few charts ago, that was right at trend. That's our 20-year look. Passenger growth and cargo growth, thanks to online and Amazon and all of those things, driving a ton of sales in the package freight market. It was weak a few years ago, and now it's back, and we project it to be 4.2% going forward. Okay, 44,000 airplanes. That's the number for the next 20 years that we predict. And between us and Airbus and the regional guys, we've got a lot of airplanes in backlog. You'll see in a few charts we got 5,500 airplanes in backlog. Still 65% left to sell. So it's still an active sales market, an active part of the business for us. You see the split between single aisle being the primary driver of the units, no surprise there, and twin aisle being a large contribution, about half of the total revenue. Okay, like I said, Asia Pacific now driving 40%. It used to be 2/3 U.S. and Europe, and now a nice split in the market again, with Asia driving a lot of it. That's what's helped keep the cycle for the last 9 years, and even before that, going strong. It used to be when the U.S. or Europe had a economic problem, we'd have these giant dips in rates, and the last several dips, the rest of the world, demand has been nice and strong. We've got a lot of airplanes going to China and Asia in particular. And so from a balance standpoint, it's really helped the stability of not only us from a manufacturing standpoint, our friends in Europe. And by the way, that nice factory over in Mobile, had a good time there yesterday seeing that. So thanks, the Airbus gang in the room, for letting us go in there and see your facility. But it's allowed us and the supply chain, all of you, to have a nice, long, steady run of production. Even with economic problems in the last several years, we've had nice long-term growth. Of course, there was also maybe the one new thing this year, or the last 2 years, is a little bit geopolitical uncertainty has trickled in here. Hasn't resulted in a problem yet for us, but it's certainly something we're watching. It's caused some problems in the supply chain with tariffs and duties and that sort of thing. Again, 5,500 airplane backlog, really good for us and the supply chain, knowing we've got a nice long revenue stream. The difficulty is your costs are known, or your costs are a little bit unknown. Your revenues are known, your costs are unknown. So that drives us to make sure we're continuously working costs down and driving new technologies and different uses of material on the airplane, particularly looking at different product form changes. So we're constantly assessing on the titanium side. It's the most expensive thing we put on the airplane. More than carbon fiber to fly. It's more than aluminum to fly. You guys know this, I've said this in the past years. We're constantly looking at should we be using tie at all the places we're using it? Can we be swapping out the different product forms? For example, we talk often about, and it's true, we use more titanium on the carbon fiber airplanes than we have in the past. There's no question about that. But did you know we also use more aluminum? So one of the fun facts I like to talk about, particularly with the aluminum guys, we buy more aluminum for a 787 than we do for a 67. That's because of the way we're using the parts. We're doing a lot more hog outs and monolithic parts. So aluminum is here to stay. Carbon fiber has a growing place in the supply chain. So does titanium. And it has, in the last several years, I think Brett mentioned I had a cost job on the 787 a couple of years ago. One of the things we did, we took a lot of titanium off the airplane. We swapped it out with carbon fiber, swapped it out with aluminum, changed out product forms, and reduced our body flies pretty substantially from the early airplanes. Rates have gone up, so even though we're getting more efficient at it, the total buy is still going up because of rates. So I'm not trying to paint a doom and gloom story. What I'm trying to say is you got to stay competitive. From a business environment standpoint, speaking of competition and expanding global supply chain, we are pushing to expand many parts of the supply chain. As capacity gets tight, delivery problems have crept into the system, lead times are getting long. We're looking to expand in the supply chain and out talking to many folks and to do just that. With this big of a market, a $16 trillion aircraft market, naturally it's interesting for a lot of new companies, and we're talking to new companies on a regular basis to expand this. And I'll talk a little bit about our regional concept in a minute too. That's playing into this. Technology insertion. Us and many others are working on additive manufacturing. I would say we're still on the commercial side in our infancy. We have a few parts flying. We're working on more. Defense and space, they're a lot more mature. We have thousands and thousands of parts flying on the defense and space side in additive. We're continuing to push into the commercial side. We're going to take a measured approach there and make sure we're doing it right, but it is something we're working on actively. The vertical integration, this has been a theme that many of you we've watched many of the supply chain participate in through either organic or inorganic means, and we're doing the same. Not necessarily in this space, but you've seen us do APUs, avionics, actuation, seats, and even interiors very recently, and distribution. So we are, like many of you, looking at how do we control our cost, how do we get more efficient. Vertical integration is one way to do it. And I'm going to talk a little bit about this in the forging world in a moment. There is a short-term, we call it a short-term capacity constraint. Some of it is self-inflicted. You know, the way our aggregation system works, we get demand in from our supply chain, we buy the metal from our mills, and we resell it to our supply chain. That's not a secret. We've had the perfect storm recently of late demand coming in from all of our participants. That's the machine shops. We've had our own problems internally in terms of with SAP systems turning that around, and that's caused some disruption in the supply chain. We recognize that. At the same time, you've had performance problems out of some of the suppliers, and I think what's happened is we're going to end up, I'm going to predict, we're going to have an inventory, maybe a little bit of excess inventory in the system here shortly, not necessarily inside the Boeing system, but in the supply chain at large, because this disruption has caused a bunch of folks to run to distribution. Distribution has loaded up the mills, and as everybody gets healthy, I'm worried that there's going to be some over inventory going on. Again, not on our side, but I worry about the supply chain in general having a bit of an over inventory. So I'd ask you guys to be cautious, and as you watch the emergent demand, be able to react to it quick. On the demand side, again, we are continuing to use more and more as rates go up, except where it's expensive. Okay. On the forging side, the top is not a secret to many of you in the room. You know how the forging, this supply chain works from mining to forging. We've got a lot of suppliers at the end, converting billet bar into a forging, and then moving on to the machine side. We've got a few suppliers that sort of sit in that middle band where they're doing some ingot conversion, and then very few that span the whole gamut from sponge or melt all the way through a forging supply chain. Our strategy, again, we're now shifting a little bit to a little more of a regionalized look, and looking to capitalize on the efficiency that can be had from companies that do their own melt and can control their own processes all the way through. And so I put this up here to say, if you're melting and forging, we're interested in talking. We've been talking to many or all of you. Some of you that have capabilities to do melt all the way to forging aren't talking to each other, through recent or inorganic or for whatever reasons, and that long term that could be harmful. I think from those of you that are more efficient will end up growing with us at a greater pace. Okay, a couple of charts on this. We are again shifting our focus a little bit from a U.S. in and out centric to trying to get a little more regional in our use of titanium, both in the mill product side and the forging side. We've got if I think about the early 2000s when we put our strategy in place, most of our machine shops and users of tie were in the U.S., so it made sense to have a pretty U.S.-centric strategy. Now we've got a much more globalized supply chain on the machine part side, and so we're looking to shift a little bit of how we think about the buy and the sell of the titanium and the forgings. That turns into how do we make sure we're getting scrap back to where it needs to be. If you remember back in maybe 2011 or so, we really ramped up our scrap collection, and now we're collecting over 50% of our annual buy in scrap and getting it back into our supply chain. So we're doing pretty well there from my standpoint. Always room to improve. And aside from the economic benefits of shipping metal around the world a little bit less, there's the environmental impact of not shipping metal around the world. And so that's one of the things that's high on our radar, is making sure we're trying to be good stewards of the environment and not putting so many miles on parts of metal. I know today, from a system standpoint, a lot of this metal gets more air miles than I do in a year on its way to an airplane. A little bit of a pictorial of where we're currently thinking about it from a concept standpoint. No surprise here. Okay. With rates going up, so you see there kind of where our relative volume has been this year on the left-hand side, the rate at which we see it going out through 2030. And there's significant upside potential depending on what happens with new airplane launches. If we decide to go forward, or when we decide to go forward with the NMA, if there's an airplane after that that is significantly more carbon intense, it'll be more tie intense. So we're banding, we see a steady increase, and we're thinking about and protecting for a sharper rise in titanium usage out in the next decade. From that standpoint, going to be some more CapEx needed. Most of the assets that are in place today, many of them, are post-war assets, and they're spread around different regions and different facilities. And I know some of the companies, many of the companies are doing some investments, but I feel like they're bolting on to existing inefficient systems. So I think it's time to think about, and again, I know many of you are already thinking about this, we're thinking about this, some significant investment in some of the areas I've listed there. Forging, tubing, mill product, additive, and others. Has been a near-term or a recent short-term capacity problem. It's going to get worse if nobody does anything about it. And again, I know many companies are doing things about it. And facility maintenance, I worry about many of the investments that have gone in place in the last 2 to 3 years have just protected outages. New assets have gone in the ground, and at the same time, assets have broken. And so we haven't really, as an industry, gained a ton of capacity as a result. And so the other thing I think we're going to be doubling down on in terms of our oversight from a OEM standpoint, and I want the supply chain to look at your health maintenance programs, your facility maintenance programs. Again, many of these assets are old. I know a lot have been upgraded, but you guys are driving them harder than you've ever driven them before at these peak rates. Between us, our Airbus and the engine companies, you're putting more hours on these things than I think you had ever planned on. And as things break, that turns into a real problem for us and all of us. So this is a relatively small community. And if any one of us has a major outage, that could be a problem for the rest of us and cascade down. So again, please go look back at your maintenance programs. We're going to be spending more time in oversight here. The outages have been pretty well publicized, so maybe refresh your maintenance program looks at those. Okay, scrap. Like I said, we're getting more than half our scrap, half of our buyback in scrap, and continuing to attempt to increase it. We're still don't have the segregation that we like. It's good, it's okay, but it can always be better. And so the other piece of this is I need to make sure that everyone's thinking about how do we segregate the scrap? How do we get the metal units in the aerospace supply chain? And I know there was leakage. I know, in my view, still too much goes to ferro-tie. From a Boeing standpoint, we're going to be continuing to focus on trying to get that scrap segregated and back into our melt sources as much as possible. There's a ton of benefits. I will read them all to you guys on the closed looping of the scrap. But from this will play into our regional strategy. Today, we pull a lot of scrap back into the U.S. As we expand the supply chain, we're going to end up doing a little more regional looks at utilization of our scrap. We've got a number of things we have to do from a commitment standpoint that we're going to continue to meet that. But as we get better at working with the machine shops at segregating scrap and our own internal operations, we'll continue to look at regionalizing this as we implement our green loop vision. Okay, just a quick recap from an investment standpoint. I can't say this enough. Make sure you're looking at your investments, not only in capacity expansion, but in maintenance and facility health. That middle chart there, if anybody's been in Boeing supplier conferences or public events in the last 5 years, that's the old PFS chart. PFS hasn't gone away. We're not maybe being as public about it as we were in the past, because in our view, it's already something we're working on, and it's not gone away. We're still talking about it. We're still working on it. So from an investment standpoint, make sure that the investments you're making, not only just to expand capacity, try to get more efficient, because for us, PFS is still a very alive and well and active component of how we work with the supply chain every day. And that includes, when we're talking about expansions or new investments, how to maintain efficiency, how to maintain competitiveness. And like I said at the bottom there, Titanium has successfully bought its way onto the airplane in many, many programs, but you've got to earn the privilege to stay. Okay? With that, I think that might be it. Thanks for the time. Are we doing questions? I guess I forgot to ask Jennifer, are we doing questions?